Investors are flooding into the GraniteShares 2x long NVIDIA leveraged ETF ahead of the GTC conference next week. This is not investment advice. The author has no position in any of the stocks mentioned. GTC.com has a disclosure and ethics policy. In one of the best illustrations of the buy the dip mentality so far this year, investors are flocking to a leveraged long-only ETF to generate outsized gains on the back of the recent weakness in NVIDIA shares and in anticipation of the GPU manufacturer's upcoming GTC conference. This funding influx serves as an emblem of sorts to the uber-bullish sentiment that still persists around NVIDIA shares despite transitory weakness. As we noted recently, NVIDIA performed a 10% intraday round trip on Friday amid heightened call option monetization and profit-taking activity, eventually losing around 84% of Uber's market cap. At the time of writing, the stock is still down around 10% relative to its all-time high of $974 per share. A few days ago, I highlighted with the GraniteShares 2x leveraged NVIDIA ETF, $NVIDIA. I noted how speculative money was piling in. Look at what happened yesterday, the rightmost green bar, bottom panel. Yet, savvy investors appear to be viewing this current bout of weakness in NVIDIA shares as a buying opportunity. Consider the fact that the GraniteShares 2x long NVIDIA leveraged ETF, which aims to post 2x the gains and losses on the underlying stock, attracted over $500 million in inflows on the 11th of March alone. According to Bianco Research's Jim Bianco, this is mania-type behavior. Separately, Benda Research recently pointed out that retail investors are now rotating out of Tesla and into NVIDIA. Interestingly, the GPU maker still has a long way to go to match the retail investors' peak Tesla holding level. Cantor Fitzgerald raised target to $1,200, CEO Wang the soothsayer of Santa Clara. NVIDIA will be hosting its GTC conference March 18 to 21, the first live conference in 5 seconds, while many of the meetings will be at the San Jose Convention Center, CEO Jensen Huang's. Meanwhile, NVIDIA investors remain fixated on next week when the GPU manufacturer hosts its much-anticipated GTC conference. This will be the company's first such live event in 5 years, with investors eager to hear NVIDIA's CEO, Jensen Huang, offer additional insights into the ongoing demand boom for AI accelerators. According to Cantor Fitzgerald, with generative AI at a tipping point across countries, industries, and nations, the transformation potential is incredible. We estimate the enterprise multiplier for tech spending is for every $1 spent on an NVIDIA H100 GPU chip there could be $10, $12 additional spending across the tech ecosystem. This in our opinion is about the 2ND/3RD/4TH derivatives of the AI revolution now playing out. On a similarly optimistic note, Wedbush's Dan Ives continues to maintain that for every $1 spent on NVIDIA's AI-focused chips, the broader tech sector is expected to see between $10 and $12 in additional spending as the 2ND/3RD/4TH derivatives of the AI revolution plays out.